Hi, everyone. This is Jason Bjork of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but I've been following her work for months. She posts a lot of great trading information on her financial Twitter, also a lot of spicy tweets and other very interesting humor for financial humor. She is an investor, an independent trader, a coach, and a published author. Lia Holmgren, thank you for joining me.
Hi, thank you so much for having me. I'm very excited.
So, Lia, we're recording this interview on Thursday, June 8th, 2023. For my listeners who are not familiar with you, how did you become interested in the stock market and trading?
So I've been investing in the stock market since 2013, but my investing went basically I deposited every month or every quarter some money that I saved, and I had Vanguard, that robot investing, and it was just investing for me. So I have never looked at the market. I just had it there for retirement. And then in COVID, I was calling them. I said, hey guys, I want to stop this because I think the market will tank. And they said, no, it's okay. We have scenarios and we're counting on it. And then suddenly my portfolio was down 38%. And I was really upset. And I said, I would sell the stocks and wait if it would be me. So I decided to learn because I kind of felt uncomfortable to have some robot taking care of my money. And I started trading, remember, I think it was 27th March 2020. That was the day. And I'm trading literally every day since.
Are you talking about Vanguard index funds or some type of robo trading program?
So it's the robo investing, right? They go over the scenarios. They ask you how much money you can put every year, and you can deposit every year. And they basically tell you how much you could have in 20 years or 30 years. So it's a robot investing with Vanguard, and they are then rebalancing the money for you. So it was mostly in their mutual funds and index funds, VOO, VHI, you name it. They have so many products. So that's how it was. I wasn't even paying attention to that. So I was completely I didn't even know how to buy a stock when I started. That's why the first thing I hear that Vanguard has low fees and I should just invest with them. That's what I did for 7 years until COVID.
It sounds like it was not their index fund. So it sounds like they were selling you some type of trading product where they were collecting fees on it and then rebalancing with maybe modern portfolio theory. But that's the old school stocks and bonds. But in the environment we're in now with central banks playing around with interest rates and stimmy checks and stuff like that, I don't think the 60-40 model of stocks and bonds is going to work going forward.
I don't think so either. I mean, it didn't work last year, right? The fee was very low there. I think for a certain amount of money, the fee was 3% a year, I think, 0.3%. Yeah, that was the fee. It was very low. I mean, as I said, I had no idea in March 2020 how to buy a stock. You need to understand, I was completely lost. And I just decided to learn. And I learned. I spent every day learning. I learned until today. I think we have to learn as traders all the time. There is never enough of information.
You sound a lot like me during 2007, 2008, 2009. I hadn't bought a stock yet in 2007 or 2008, and I was just following along with the housing crisis and what the Fed was doing. And I was just shocked at all the rules being changed and the bailouts. And unfortunately, the last 15 years, just things have just gotten worse and worse and crazier. They just play fast and loose with the rules as they go along. But you've disclosed this publicly, and I think this is really interesting, an opportunity to talk about this and the lessons you've learned. You've disclosed publicly that your initial trading losses, you lost $500,000 trading, which is a shocking amount of number, but obviously you've recovered from it. What type of lessons or expensive lessons did you learn from those mistakes?
So I even wrote an ebook on that. That's for free or download, because really 2020, I started trading and I made 165% on my money. And I traded with a lot of money because I had savings, I had investments. 2021, I lost the $500,000 that I made in 2020. It was about that amount. And it was just horrible. Up to February 21, I was just rocketing the portfolio. There were months I made $200,000. For a normally earning person, it's insane money. I was just flying high on dopamine. And I was I'm going to be a multimillionaire and decamillionaire. Anyways, the time changed in February 21 and all my stocks started crashing. And instead of getting out, I kept buying. And by, I think, October, November 21, I was down the whole entire $500,000. The problem I had was that I had to pay the tax for 2020. So if you think about it, I actually had to pay a huge tax bill. So I was actually in minus. It was really frustrating. It was really difficult for me. I was in a spot in August 2021 when I was like, I'm going to jump off of a balcony, literally. I wouldn't do it, but I was super depressed. I didn't want to eat. I was crying. I was just really mentally wrecked. And that's when I took a break for a month and I started looking, what was I doing wrong? And that's when the real learning started, because quite frankly, 2020, any degenerate stock you would buy, it would go up. So that's what I thought the market is. I'm like, wow, this is really easy. I realized it's not like that. And I started learning and I started having discipline. I actually was learning on with small amounts and I was really sad for a while. And then 2020, I started being profitable. Although there was a bear market, I started shorting. I learned selling options. I learned how to be getting into positions with selling puts, how to do spreads. And I've been using those strategies until today. I love options. I love math. I was very good in math in my school. So it was just fascinating to see how options work. And, I'm learning until today. There is always something new, but now I have a system. I'm consistent. I'm profitable. If there is a choppy day, I don't trade. I pick the stocks wisely and I have the same risk that I use on every single swing or day trade. And that's what saved me, because I have no position sizing in 2020, 2021. I was just YOLOing money into stocks. And some of the stocks were great, but some of the stocks were horrible. I lost so much money on all this crazy, like Roku and Fubo and whatever was on Twitter or Wall Street bets, whatever was popular, I would say, without any sort of due diligence. And again, you can trade anything. I don't care what I trade, but I was turning trades into investments and they were becoming bags. So that's not the biggest lesson. Just really have the risk ratio, risk to reward ratio, risk the same amount of every trade. Don't oversize and actually have a plan. When you want to get in, you need to know when to get out of the trade and stick to it. Because what I was doing, I saw the stock falling and I would be looking at it and hoping that, no, let me wait, but it must turn back up, because that's all I knew from 2020. It must go back out. This is impossible. And then suddenly you're down 10, 15, 20K on a position. And that's when I sell. Or for example, I would buy 10 leaps of BABA. Each was $5,000. I would buy 10 of them by mistake because that's what the default was on my broker. It's like every sane person would be like, oh shit, let me correct the mistake and just buy one. I said, no, that's okay, because the spread was like creating $2,000 loss. And I said, you know what? It's okay. It's going to recover. It didn't. I lost $50,000 on this one trade. It was the biggest loss I ever had on one trade. It's just absolutely insane.
So it sounds like you had beginner's luck at the beginning. So you had good timing. You benefited from luck and timing with the Fed doing zero interest rate policy, stimmy checks, and then you were able to correctly find the stocks that were going to benefit from all that extra liquidity and capital going into the system. But then it looks like your position sizing were oversizing, so you didn't start taking profits as it was going up and trimming your positions down.
Well, I was taking profits, but the problem was I kept buying. For example, I would sell with a profit and then the stock kept rallying and I would buy it much higher and I would not have a stop loss. So when we turned the course in 2021 after President's Day, I never forget it. Everything just started tanking. The sell-off started with the SPACs and small caps and then mid caps, and then the mega caps start catching up with the indexes in November 21. And this whole thing was just rolling down the hill pretty much for a year and a half, I think. Oh, no, year and a half. I think November was when we started recovering a little bit, at least the mega caps last year. So yeah, year and a half of free, just rolling down the hill. So that's the problem. I was taking profits, but I was not keeping the cash, waiting for opportunities. Like now, for example, I sold some of my mega caps just to have some liquidity on my swing and five years trading account. And what I would do in 2021 or 2020, I would take this money and start buying overpriced stocks. But what I did now, I kept a bunch of the cash, or I looked at the charts, actually. I looked at the charts properly and saw what is undervalued, what is going through a hard time, and which stock might be breaking into the phase 2 or bottoming, and that's what I would buy. But back then, I just bought whatever. whatever I saw on Twitter.
So you would say that. So you would say that keeping some of the ways to keep losses to a minimum are to be strict with your position sizing. So capital discipline there, and then also stop loss, stop limit orders there. So the losses just don't keep rolling and growing every single day.
Exactly. And just follow the overall market too, like there's always a bull market for something. Like 2022 was a bear market, but oil didn't have bear market. Industrials didn't have. So it's good to also buy different things and pay attention to the macro as well. Of course, when you just want to take a day trade, you don't need to take care of the macro. But if you are invested and if you're buying stocks for a longer term, you do want to understand the market at least a little bit. I'm not suggesting people need to go to finance bachelor or take a whole entire education, but educate yourself how the market works and what is actually driving the market, even like the interest rates. That's something I didn't know at all. Like I had to learn all of it the hard way.
Yeah, I'll give you an example with interest rates. The average person is, and a lot of hedge fund managers I speak to are not thinking about this, but with the interest rates at these levels, if you're a small cap company and your shares just had a rally, your cost of capital, if you want to issue debt, is still sky high. So these small cap companies that are publicly traded, that their shares rallied, now that their shares are up and the interest rates are still high, they're going to want to issue more shares. So there's going to be a lot of share dilution coming. The average person's not thinking that. So if you had a pop in your small caps, you might want to think about taking some profits or hedging.
Oh, hell yeah. I don't own too many small caps, quite frankly. I have little tiny bits, but I'm mostly invested in mega caps. Mostly. That's like the biggest chunk of my and blue chips. That's the biggest part of the portfolio. And then I have like maybe 10% speculative little stocks, very tiny amounts. And I took a lot of profits last 2-3 weeks. I'll be honest with you. As I said, I took half of my Microsoft, which is not a small cap, but it rallied like crazy. Nvidia. I got out of Caravana. I got out of Affirm, like all these things that were rallying absolutely insanely. I'm out because these are not the stocks I want to hold. I don't mind holding Microsoft through hard time, or Amazon. I have a lot of Amazon, but these little ugly stocks. So yeah, that's a good point. That's very, very good point. You're very smart to say that. With the small caps, it's good. People need to know this, really.
Well, I speak with I cover the resource companies, so I understand like those companies have the highest cost of capital of almost any industry. So for the commodities companies, if you're an oil and natural gas company, a mining company, with these interest rate increases, I mean, they're just getting absolutely penalized, especially if their commodity price is low. Now, you talked about NVIDIA. You said you sold off. Do you think that there's going to be a lot more volatility with NVIDIA? So as a trader, that's going to benefit traders. But if you're a long-term investor, though, the stock's going to go up and down a lot. So that's going to be a roller coaster.
Yeah, and I love NVIDIA. I mean, we have a beautiful inside day today, and I'm going to look to trade it. I don't mind trading NVIDIA every day if I can. It's a beautiful trading stock. For owning, look, would I have infinite amount of capital? Sure, I would keep some NVIDIA shares, but I think that the stock is extremely overvalued and it can get much, much more expensive. It's fine. But just from the purpose of me investing, I want to invest the money in other stocks. That's why I sold and I just created some extra capital. And look, even now, it had a nice sell-off, so I could buy them, the shares even now. If I would decide to go back into the investment, I would already be buying it for much lower than I sold. So it's fine, It's all about the movement of your capital and where you want to put the money. So I'm sorry?
Do you look at any specific indicators or valuations when you decide to take profits on a trade?
So on a trade or investment?
Well, you can feel free to talk about both, what you do the research on.
So with the trades, honestly, I usually swing trade. I day trade very little. I'm more a swing trader. So like, for example, if I'm up on a trade overnight, 6-7% on equities, I take the profits because I think it's a beautiful overnight profit. That's just me. I don't like to speculate. Maybe I take two-thirds off and I leave another third of the shares for the rally and adjust my stop loss. That's how I usually trade. just to have some shares for the potential. And there is also like sometimes you wake up and your shares are up overnight 10, 15, 20%. I mean, I don't want to be greedy. So this is a time when I take my profits, for example. Or I trade technical levels as well. I trade technical levels. I look at the chart. I really love using 10 exponential moving average and anchored VWAP for day trading and swing trading as well. And the momentum is beautiful with this indicator. You can just see stocks rallying around it. And 20 is also nice, but I prefer to have less. When I started trading, I would have 5 different moving averages on my chart, and now I just have the 10 EMA, and that really works well for me. And so that's pretty much for a trade, right? When it gets to my level where I kind of think it could get, I will get out and leave the runners. And if it's not getting to my level, because of course you never know, I look at the price action, and sometimes I'm in the trade and I estimated that the trade will go much higher, but it just doesn't go there. And I see the momentum and the volume is slowing down, then I take my profits too, although they're much smaller than anticipated. It's just about really like reading the markets. Like sometimes you have a plan, but the plan will not happen. So I rather take some profits than no profits. And that's how I look at the trades. Now for an investment, it's just literally like price to earnings ratios, price to sale ratios. And like with NVIDIA, I think that stock was just too overvalued for me. And again, like, would I have infinite money? I would love to keep some NVIDIA shares, but I kind of wanted to buy other things. And I looked at some stocks that are really beat up this year, and I was allocating some of the funds there. And I still sit on a lot of cash. So I have about 20% cash in my from overall brokerage portfolios. Now I'm not talking about my net worth, but what I have in my brokerage accounts.
So for your long-term investments, are you looking for income, or are you looking for capital appreciation, large capital gains like a growth company, or are you looking for some type of combination?
I'm looking for just increasing my net worth and my wealth, to be honest with you. And I talk about it a lot on Twitter, which people ask me, how many accounts do you have? I have 2 investment accounts. One is for 20 years and one is for 5. And what I love to do, I dream about what I want to do with this money. I have a fantasy. I have a goal. For the 5 years, that's my fantasy account for buying a villa in south of France. I'm obsessed with that idea. And you know why I have this fantasy and this goal? Because I learned the hard way. Last year, I was in crypto and I was up extreme amounts of money on that account, my crypto. And I did not want to sell because I didn't want to pay the taxes. I said, this is a headache. I might make more. I didn't have a plan with the money. And if you don't have a plan, you don't really care. You don't need the money. You're like, okay, whatever. Let me see what happens. Would I have the fantasy linked to that crypto account? I would have sold. What ended up happening, the crypto tanked and I'm down literally 70-80% on that account. And a lot of the crypto disappeared in, sadly, Celsius. So I could have had, something for that money. So what I do now, I really have a strict goal. I have 5 years portfolio. That's my retirement summer residence in Europe. And all I do there is capital appreciation to get to the goal. And the 20 years is for my retirement. Pretty much when I'm retiring, I take all the money I have there and I will put them on dividend stocks or passive investment, and I will live off of that money.
So when I speak with a lot of people who trade crypto a lot of them don't think about the tax situation. So there was a lot of mistakes. I've been covering crypto since I know Trace Meyer since before he ever bought a Bitcoin. So I've been covering crypto for over a decade now. I actually fired my former business partner because he lied to me for 4 years. Back in 2013, he was supposed to buy 10 Bitcoins for around $100. And then he lied to me for 4 years and then didn't buy them. So I fired him. But anyway, it's water under the bridge. But the problem with like crypto is it's not taxed like stock. So if you buy and hold a stock for a year or so now, I think it's 10 or 15% long-term capital gain stock. But there's tons of people trading in and out of crypto and they weren't tracking the taxes or they weren't saving the cash to pay the tax man. And a lot of people back in 2016, 2017, before the recent crypto move higher and then the bust, they didn't save any cash to pay the tax man off. So I think like, unfortunately, the mistakes are kind of repeating themselves.
Yeah. And, I just didn't want to add it to my tax bill. And that was a huge mistake because now looking back, I wish I could pay the taxes. You know what I mean? I wish I would have that problem instead of seeing my money disappear. That was literally amount of money I could have bought my parents' condo in Miami Beach. And it sucks. So that's why now I'm not making that mistake again. I have my goals and I'm like strictly visualizing the goal. And it's beautiful because every decision you're going to make on this account, you're going to think about, okay, is this going to bring me further to my goal or is it going to bring me away from my goal? And I think adding some sort of an emotional attachment in like visualization to these accounts, it really helps. So for me, it's truly just growth of wealth. I don't use I literally do not spend $1 from my trading accounts for my own life. Never. From none of them. From day trading, swing trading, nothing. What I do, I'm moving the money around. For example, from my swing trading account, I have a certain amount of money there that I swing trade with. And at the end of the year, when I'm up, I take the money that are over and I move them to my long term and I let them sit there. And then I go again. And that's how I do it. But I don't live off of my trading money. I don't want to spend the money. I just love to be saving everything because I have other income that I live off. And that's how I do it. So it's just truly just growing my wealth.
So for long-term investments and value plays, you're not looking at, say, oil or energy right now and saying some of these oil companies like Petrobras or Canadian Oil Sands or Suncor that has a 6% dividend yield, still profitable. You're not looking at saying, well, I could earn an easy 6% right now compared to buying treasuries or something like that.
I do have this. I actually am really heavily in PBR since December 2021. But the decision was not because of the dividend. I mean, they keep increasing the dividends. It wasn't that decision. For me, I went heavily into oil in December 2021 because of the macro. That was my reason. I went into a bunch of oil stocks. I had over 10 oil stocks, and that really helped me a lot the first 6 months of 2022 when oil was killing it. And now I have probably 4 or 5. I'm looking at my portfolio now, energy stocks and yeah, that's the dividend is beautiful, but it's not my goal, quite frankly. It's just, I love the stock. I think it's a PBR, for example, is trading like yo-yo. It's a fun stock to hold and trade. And I keep selling options around it all the time.
Do you sell covered calls then for extra income? I
do. I sell a lot of covered calls and I sell a lot of cash secured puts. Like with PBR, now today, my God, yesterday, as I said, like I always have my core position and I trade around it. So I keep selling covered calls and I keep selling puts. And on not only PBR, of course, I do it on most of my stocks that actually make sense. Some of the stocks you get such a small premium that it's not worth my time. Honestly, if I have to get $30 for a covered call, I do not want to do the work for $30, to be honest with you. But I think it's a beautiful income. I'm actually doing free webinars on this too, because I think so many people sit on stocks and they don't know what selling calls means. They don't even know it exists. And it's beautiful. Like imagine you can create another $1,000, $2,000 a month on your holdings. Like that's pretty good, I think.
Yeah, I was speaking with someone on Memorial Day at a party in person, and he pulled out his stock trading account on his phone, and he had over $400,000 in one stock in Low Stock, which is the competitor to Home Depot, and he bought it like 15 or 20 years ago. He didn't want to pay the taxes on it. He was trying to ask me how he wouldn't pay any taxes, and I was like, well, you can hedge by selling covered calls. And he was like, but my shares will get called away. I was like, dude, you're going to have to pay the taxes at some point. You may as well start pulling some cash out and diversify that away from your overweight position, because I think that made up like 30 or 40% of his entire stock portfolio was the one stock. But he was just complaining he didn't want to pay the taxes. And I was like, I don't know, Lia, if you've seen all my some of my videos with my Stagflate tax life thesis, but I think going forward, unfortunately, we're looking at a lot of currency debasement from all these governments and central banks and higher taxes. So people like you and me are going to have to do more trades that we're not comfortable with because there's going to be more taxes and more currency debasement going forward. We're going to have to do this to maintain our income and maintain our standard of living.
Yeah, it's like I don't have that mentality anymore. After, as I told you, with the crypto, I learned my lesson. But I trade under C Corp. So I have corporation tax. And again, for me, it makes sense because I do not want to distribute the money from my corporations. My goal is to buy real estates, and so I trade with C Corp. That's so far the tax there is 20%. I don't know if our government now or later is going to change it, but for now, that's the structure that I am trading with. It's not good for people. They want to be taking money out of the trading accounts because they want to live on it. That's probably not good because then you will be double taxed. You're going to be taxed as a corporation and the distribution as a private. But for me, as I said, it's just for growth of my wealth. That's what I have structured.
Yeah, the stuff with the taxes is crazy. I actually pay a self-employment tax now on my revenues, even though I have a limited liability company. So that was a new change recently too. So it's just getting ridiculous with the taxes.
Yeah, and then you think about countries like Germany. When you have an LLC in Germany, I think the tax on trade is like 2%. In Slovakia, also, like if you hold stocks longer than 1 year, is 0% tax. It's just really bad here. Like US it's sad, but people living in the US think how amazing the country is. And I don't want to be in any means talking poorly about the US. I love the country. I have a very good time here. But it's not that great when it comes to a lot of things. And the taxes here are just absolutely insane on this stuff. Like with LLC, with private, it doesn't matter. We're just paying so much money for tax. If you look at other European countries or Switzerland or anywhere, even Spain, like when it comes to capital gains, it's absolutely different.
Well, those other countries aren't intentionally inflating asset prices, stocks, bonds, real estate. I mean, the Federal Reserve Bank back under Alan Greenspan 20-something years ago, they were writing white papers and doing television interviews about the wealth effect, which is really the Cantillon effect, that they need to inflate the asset prices. They're going to intentionally inflate the asset prices, Leah, and then they're going to want to tax them more.
Yeah, but you can buy American stocks from Europe. Like my mom in Europe, she's invested heavily in the US market. She has her investment portfolio, for example, and but she doesn't pay. She pays no tax on her investments if she sells them after a year from the day she bought them. So just think about it. It's absolutely fascinating.
It sounds like the U.S. is charging extra taxes to investor capital directly here, unfortunately.
Yeah, sadly, it is what it is.
Well, right now, I think the U.S. stock markets are the ones that are doing the best. So if you look at all the other stock markets with all the other macro conditions, I mean, all the other stock markets are in clear bear markets. There's a lot of bear market signs, deflation signs, at least short term with the central bank policies. But the U.S. stocks are the ones that are what everyone's talking about on financial television about a new bull market now.
Yeah, I mean, technically makes sense. It makes sense. I mean, you know how it was until the television was talking about bear market. I think they started talking about bear market in May 2022, which technical traders were already talking about. We saw the bear market since end of 21. And it's funny now they're talking about bull market when stocks are up, tech stocks are up 100% and more, a lot of the stocks, So it's just like, I always take this with a grain of salt. I believe we are in a bull market. I think so too. And I honestly don't care because I have no emotion about what market I am in. I know that 75% of time the market goes up. And I kind of am sad that I didn't allocate the rest of my cash. So I quite frankly wouldn't mind if we have one more nice dip before we go up. I would be actually really satisfied so I could buy more stuff. But yeah. I think I enjoyed the shopping last year. I even sold my 8-family building to buy stocks. I sold like literally everything I could sell when it comes to real estate to buy stocks. Because I knew that I made 400% on my real estates over the course of 16 years. And I knew that another 16 years, the real estate is not going to go up another 400% because we were so high on real estate index. But I know that the stocks that I bought will probably go up 400% in next 16 years. So that's a huge decision I made. And it wasn't easy. But I was kind of like, wow, we have so many opportunities in the market. Let me just do this. And I did.
I think stocks can outperform real estate because if the Fed keeps interest rates at these levels for a while, I mean, a lot of real estate, whether it's commercial real estate, and there's immense problems there. This might be the worst commercial real estate bust in the U.S. in 80 to 100 years. But at these mortgage prices, I mean, if you have a perfect credit score, I think the mortgages are 7%, which is unbelievably high. The demand for mortgages is very, very low. So we're going to have real estate problems coming if the Fed keeps rates at these levels.
Absolutely. And I really want to buy real estate, but I tell you the truth, I want to buy a place for my parents because I want them to move to the US. I really miss them. And the prices I live in Miami, the prices in Miami and surrounding and South Florida and just insane. Like, it did not make sense to buy a place because I will be much better off renting. Just like when you look at the numbers. And the same problem I had in New York City. I lived in New York City for 7 years and I looked every single year to buy a place. And what ends up happening with the mortgage, the maintenance, and the taxes, even if I would rent the place, I would still have to put $2,000-$3,000 a month from my own pocket just to pay for all the costs. So the rent, I would never be able to get the rent to just cover my cost. And that to me is ridiculous because I owned real estate for 16 years. I was renting 14 apartments and I sold them last year. And I was literally having passive income. Not only the mortgage was paid, but I also had extra money for living, So for me, paying this money, I don't know. I honestly am completely confused where it even makes sense to buy real estate at this point. I don't know.
You should talk to Jason Hartman. He's a rental property coach. So he says that the rent to value ratio in all the major cities and metro areas, it just doesn't work with the mortgage and the higher property value. So basically, like, you can't with the math, with the mortgage payments and the property taxes and what you can charge on rent. So having a rental property in any major city in the United States, it just doesn't work. So he said you can live in a major city or metro area, but you can't own rental proproperties there with the property values.
You can't, yeah. And I look, I travel every week. I was in LA last week. I was in New York 2 weeks ago. I'm going to San Francisco. Like, I'm constantly on move. And these big cities just do not make any sense. And that's why people like, why do you live in the rent in New York? Because I'm getting smashing apartment for $7,000 a month, which if I would have bought it, I would pay 12. So like, imagine this money. It's just ridiculous. I would have to live there 50 years to even make a sense out of the whole thing with the appreciation. So yeah, it doesn't make sense. And then for me, I would love to own a place somewhere for rent, but I quite frankly rather buy REITs. And I have my stress-free investment that gives me 5, 6, 10% a month. If I would have to really decide at this point of my life after being a landlord for 16 years. So yeah, it doesn't make sense. There might be places, I see a lot of people on Twitter living in different states. They're still buying cheap real estate, but I just don't see myself flying to Ohio or upstate New York or anywhere for the fact to just have rental properties. Like, the flight ticket would be already a price of 1 month rent or whatever I would make on that real estate. So it just doesn't make sense for me. The same Austin, like, look, I really wanted to own a real estate in Austin, but the same thing, the prices are just ridiculous.
Well, look, that's where all the tech billionaires, all the rich people from San Francisco, the tech billionaires and other cities and states move to. They moved to Austin, Texas. They're moving to Miami. So if there's lots of people moving there, I mean, the valuations on those are going to go up with the increasing demand.
Exactly. Yeah, I'm lucky because I own a place in Miami and I'm up 100% on my apartment price since January 21. And if I would rent it, I would still make about 30% extra from the whole entire rent I would be just for me, for my enjoyment. So I'm very, very thankful that I at least did that. But again, like, it will be challenging. I want to find a place for my parents, and yeah, I will just have to suck it up, I guess.
Maybe you look for something in Orlando. It's only a couple hour drive. It's not that far from Miami. It's probably cheaper.
Probably, yeah. I just want to have them next to me, literally like 5 minutes car ride, because I haven't been with them I left when I was 16 years old, so it's been over 20 years, and I really miss them. So I want to have them like literally right in my neighborhood. I have this dream, like, I want to go to have lunch in my mom's house. I have this dream for over 20 years because I always live really far, so I see them very rarely. Yeah. So we'll see. Maybe the prices of real estate will go down, as you said. Like, I'm wondering who is buying this, but Miami is challenging. You're right, because not only the Silicon Valley, but New Yorkers are moving here. So they're just like outbidding the prices, because from Manhattan, everything here is still cheap if you compare it. Well, it's getting there, but it's for them, it's like, okay, great. Wow. What can I have for $2 million here? And what can I have in New York City? So people just pay. So I see Miami very, very bleak. My chances to buy something for a good price.
Well, what the Fed actually did from 2008 to 2012, a lot of people aren't aware of this. They actually subsidized BlackRock and the hedge funds, and they gave them almost cheap capital, almost 0% interest rates to go buy entire rows of houses on streets in Arizona, California, Nevada. So I don't know if we'll see something like that or it'll be similar, but I don't think we're going to see that in Miami or San Francisco. But I think we saw something similar in Detroit for a while where the properties collapsed and then the property taxes were orders of magnitude higher than the actual house.
Yeah. Yeah, I know. Yeah, but Miami, honestly, 2008 was a different story. 2008, Miami, Vegas was a ghost cities. They were absolutely crashed. I do not think that's going to happen this time. And I don't know, really, I'm just thinking the issue there is also people have real estates for super low mortgages. So why would you sell your house that you are paying 2.5, 3% mortgage on, right? Or interest rate? Why would you sell it? And there are no real estates in Miami. There is so much demand and no supply that you can rent the apartment. So if you own a place for super low interest rate and you can rent it really well, like people are not going to be losing the apartments like they were in 2008.
So you're talking about the opportunity cost, and if you have a low interest mortgage locked in on 30 years to go, then you have to go and buy something if you need a mortgage at a much higher interest rate.
Yeah, but if you own it, like you have no problem. You will not lose the apartment because you can always rent it and someone is going to pay your mortgage. So I do not think we're going to see 2008 again. It's just not going to happen because people are sitting on these super cheap mortgages right now. It's a joke for them. Like anyone can pay the mortgage. And if you can't, you rent it immediately because there is no supply of real estates. Like people need housing. I honestly don't think we're going to see that much of a sell-off, to be honest with you.
Well, probably not in Miami, but I think especially because a lot of people are moving there for more freedom and stuff like that. So they're leaving the other states for less taxes and more freedom in the Miami and Florida area and other states like that. But I think the worst problems, Lee, are in commercial real estate in this cycle compared to residential.
Oh, 100%. Commercial real estates are absolutely host. Like even New York, people are not going back to the office as much. And a lot of companies, they're still working from home. They come like 1 or 2 days. Big corporations, the office buildings are just empty. And there are a lot of projects in South Manhattan around Wall Street where they're actually turning the office buildings into apartments. I honestly don't know how it works from the architectural point of view, because like in the office, right, you have a huge office with 1 bathroom or 2 on the floor, and you need to build an apartment that each has to have 1 or 2 bathrooms. Like I really don't know how they do it. It's fascinating to me when you think about it, but that's what they're doing because you're right. The commercial real estates are just completely struggling right now. And I don't see it changing any soon because people got so used to working from home. Gen Zs, they don't want to go to the office anyways, and millennials and older generation, especially in their late 40s, 50s. I talk to a lot of these people and they're like, no, I don't want to go back to the office. I hate it. I want to be home. Maybe once, twice a week. So you're right. Yeah, there is a struggle for sure.
And people are going to have to figure out more creative ways to generate income. And one of those ways is maybe doing some more trading that they wouldn't have done in the past. I mean, it's just easier now. There's a lot more online options with online trading platforms that weren't available a few decades ago, even when people had to phone in an order to the stockbroker. There's a lot more tools available online for people to do it at home or even on their phones.
Yeah, it's absolutely amazing. Like, what I just was talking today to a friend and I was recording some videos for my YouTube channel. And I literally said that stock market is so beautiful because it gives the average person with average income opportunity to build a wealth that normally would not be possible. And I think it's great that retail has way more chances to make money trading. I know it's difficult. I know the traditional finance oftentimes says, no, everyone loses money. But look, I have a lot of friends, they're very young and they are even older and they try to make a little bit of money, and even $100 a day is good for them. If you're making $50,000 a year, like an average American, and you can make $500 or $1,000 a month just with trading, it's beautiful extra money. So I suggest that it's good for people to trade a little bit. It's good for them and to own stocks. And 65% of Americans are owning stocks, or 61 is the research latest statistics. So 61% of Americans own stocks. And if they would know how to sell options on those stocks, that would be even better. So I think that it's beautiful. We have so many platforms and education is all over, and just people need to pick the good people to learn from and have really good mentors, because like social media is oversaturated with specialists. And I find it very risky who you listen to. And I made my own mistakes and I learned from some really weird people, and I lost a lot of money as well. And then I found my great people that I learned from. So it's a rite of passage, though, the whole trading.
I also think that options trading for beginners, people don't know technical analysis, charts, fundamentals, don't have any discipline, don't understand anything about the stock market. There's a lot of people who are trying to get rich quick and they don't know any of those things, even the basics, and they're trying to trade stock options. And that's a recipe for disaster. It's a recipe to lose a lot of money very, very quickly. And I've just heard so many horror stories over the years.
Me too. And I'm always telling these people, I did 3 seminars in Miami for women. It was just a group of women. They wanted to learn. So I gifted them a seminar. It was free. It was 10 girls every time. We met 3 times. And I tried to teach them the basics of stock trading and the charts and just like how to invest with technical analysis. Very simple. And after the 3rd one, most of them said, but we hear that the most money you make with options. And I was really sad, because that's exactly how people think. They think, oh, let me trade options and make those 1,000% gains and 10x my portfolio in a month, or in a year. But that just doesn't work this way. And I'm really, really careful with that. And I always try to warn young people to not be crazy about it. But they won't listen. So, they have to learn the hard way. And I love selling options. I love to do it very safely. And that's what I'm teaching people. I'm teaching people, please do not risk like this. And do it smart way, do it on your holdings and be safe, because naked options are really scary. So, but look, we can only do so much. You're doing an amazing job with your YouTube channel. You are teaching people, you are inviting amazing people, you try to help. I do the same. I try to help and warn people, but it's like, it's all about them if they want to be helped and if they want to learn. Because the greed is very, very strong. And a lot of people are greedy and have fantasies that are not realistic.
Yeah, I completely agree. And the one major statistic that people don't understand, if you're a financial professional and you sit in options classes, when I was getting my stockbroker's licenses years ago, it was one of the first things. Over 70% of all stock options expire worthless. So the people who are trying to trade stock options and get rich quick and don't know even the basics, they don't understand that the majority of those options they're buying, trying to make 500% or thousands of percent on a stock, those options are going to end up expiring worthless, or the majority of them will.
And that's why I'm selling options with Delta 30 and less. Because exactly the statistics, because when I sell them, I have and they are Delta 30 or Delta 28, there is a 70+% chance that I will keep the premium. And that's exactly what I love to do.
And as long as you have position sizing, capital discipline, risk controls, those things in place, you're going to be okay. But it's the person who buys a couple of these stock options and spends thousands of dollars on them, trying to multiply that into 6 or 7 figures. That's when the losses just explode.
Exactly. And one other thing I want to add to it, we had a good month. And then you see on Twitter how people have 100% on their portfolios and they make money and they suddenly have this fake confidence how great the market is again. It's easy to make money with options if you're just going up. And the problem is when the market goes up a couple of weeks or months, people are just buying these options and overnight they're up a little bit. They make money. They're super excited. And then we have a drawdown because the market will correct on every single time frame, right? And we will probably correct any soon because we are getting to the August 2022 levels. So I wouldn't be surprised if we correct a little bit, which would be healthy. But that's when the people lose all the money again, because they will probably be in 3, 4, 5 calls and bigger sizes than possible, because they will think that they can trade and then they will have no stop loss and then will wipe up their whole entire gains from month or two. And that's how it works. And that's why we have all these new traders, they lose money, right? How is it 95% of traders never make it? And that's why I'm extremely thankful that I'm still trading and I'm actually making money every day. And it's not about trading every day. It's about actually being aware of the market and see when I want to trade and when I don't want to trade, because there is no setup for me. Like today morning was really choppy to me. I think the first hour and a half was quite annoying. I was trading because I found amazing stock and I was trading with a half size as I would normally trade, for example, because I said it's choppy, I don't want to lose money. But this is all that comes with the knowledge of the markets, knowing yourself and knowing when not to trade as well.
Well, Lia, I really enjoyed our discussion today. If my listeners want to check out some of your courses, your YouTube channel, some of your free stuff, or take a look at your paid coaching, how do they do so?
So I am on Twitter, Lia the Trader, and YouTube. They're more than welcome to follow me, Lia the Trader, and contact me through my Twitter or my website, liaholmgren.com. I do the only paid product that I have is one-on-one coaching when I help people to work on their discipline. I'm heavily focused on that and trading psychology because that's my background. I worked as a marriage counselor for 10 years. And yeah, so that's pretty much it. I have a lot of free webinars, once a month free webinar. I write free newsletter. They can sign up for a free newsletter as well. And a lot of videos. So that's it. And this was really good. Thank you so much for having me. I really appreciate it, Jason.
Yeah, I enjoyed our discussion, and I think I learned some stuff about options trading and some of the strategies you use. The average person who's doing a lot of trading, though, especially when they're starting out, they don't understand stop loss limit orders. They don't pull profits off the table. They don't manage their risks on the downside with losses. They have position sizing problems. So those are some of the most common mistakes.
Yes, absolutely. Mistakes, they will ruin your trading account.